What's up, guys, and welcome back to the channel. Don't forget to like, comment, and subscribe if you enjoy these videos. And without further ado, let's get into this trade recap. So today I made 609 on this combine, and then I had minus 141 on this one, and all the rest of them I locked out. This is minus 500. This is at 2.1. This one's at 1,000. This one's at 2.2. This one's at 1,000. So they're all in pretty good standings, but we're in December. The price action is pretty rough. I'm not going to be trading heavy during December price action because it's just a lot to deal with. But coming to the day, I traded the New York session today, and that's what I typically trade. We had what is that? We had news at what time? 7:30, and it was unemployment claims. This was the forecast, 220,000. The previous was 192 for unemployment claims, and the actual was 236,000 unemployed. Now I don't know exactly how it has an effect on the NASDAQ, but I got to do more research and look into that so I can really figure out where to position the market. But anyways, coming to the day, I was more bearish than anything. So the structure that I had going was something like this right here. And I'm just going to do this really quickly. And so we had a break and close below this low right here. So that for me was a 2-hour break of structure to the downside. And so if this is my external range from this high to this low, this will be all internal price action. Trying to see the internal being taken and then the external being taken, which would be this low right here. This is the low I wanted to see taken. So with that being said, I saw also that we had a bullish imbalance in this zone. So I expected some buying to come out of this area somewhere, whether it was the last down candle or it was something within here. So initially during the day, I wanted to see sales, which I got into right off the open. I just sold, and we made like 150 off of that. So let me see. We also have the imbalances in price right here, which this was kind of like the key area I wanted to see us reject from. But by then I was already out of the market because I took buys back to the upside. So let me go to the actual shortcut and just type imbalance. Now, this is the zone I wanted to see mitigated. And then we also have an imbalance down here that I wanted to see mitigated as well. So I expected a reaction of sellers from this area and also a reaction from buyers from this area. Ultimately, I expected the sales to take over because we had this high that created this low. We also have a double bottom. So that's major liquidity. So off of the open, we sold, and I was expecting some buys to come out of here before we completely sell off, which I wanted to see something like this, which would be this was the first push down from me selling. Then I wanted to see a push up to take this high and then a break back down. So let's go to the 5-minute time frame, and now I can get rid of the sessions indicator. So where were we at? Right here, this is the open. Right here, this is the open. This 8:30 right here. So I ended up taking a sell right in here, and I didn't need to have it go all the way down to that spot, but as you can see, we ended up going all the way down to the imbalance and even through it really. So that was a beautiful trade, but I got out super early. I did not think we were going to go all the way down here. Now there was a bunch of liquidity down here that I did see as well that I knew we could react from because we initially had a strong push out of this lower zone, and we know it was a strong push because we have imbalance. So strong push coming out of this zone with imbalance. So I'm expecting some type of buying pressure to come out of this area. Now, going down, excuse me. Whew. Going down to somewhere around the 5 minute, I'm looking to see more evidence to what I was talking about, which was a strong push down, then a strong push back up, then a push back down, and then for us to finally go lower and take the lows. I saw that we had the London session lows right here. You can see London session lows, London session liquidity, and you know sessions like to hunt liquidity. So, boom. We started taking out this liquidity, and we immediately got some bullish price action going to the upside. Once we started breaking candle highs, that's when I ended up entering in for a buy position to head somewhere back up here, and even possibly to take these out. But I ended up getting out of my running position around, I think around here. Now, oh, matter of fact, I actually took this trade on the S&P because we had SMT divergence. Let me go ahead and show you that. So we had an SMT divergence, which if you've been around in this channel before, you should know by now what an SMT is. It's basically when you have two correlating assets like the S&P 500 and the NASDAQ, they should make kind of the same highs and the same lows. So in this area right here, you can see that this is 230, and then this is 230, and then I mark that out. And then you can see we get a lower low on the NASDAQ, but we get a higher low on the S&P 500, which this is called SMT divergence. And so that leads me to believe that there could be a potential reversal. And with that happening and us being higher on S&P, I expected S&P to be more bullish. So I took my first trade in a long time off of the S&P 500. Now, marking that SMT, we can see what that was looking like on the lower time frame. And it was looking much better, in my opinion, when it comes to taking your trade. So we ended up sweeping liquidity right here on the S&P. And when I started getting the break of those candle highs, I ended up taking a buy position to take out the equal highs up here. We got a high right here, and a high right here. So bam, that was essentially the setup. Now I expected us to end up coming and taking this, and then most likely running back to the downside based off of the markup for the NASDAQ. So just looking at the S&P, if we go to the 2-hour time frame, which we're on, we can kind of look and see what the structure has been for that. Boom. We go lower right here, higher, lower. So I mean, honestly, for about a week and a half, excuse me, we've been kind of in consolidation and just taking out lows and highs over and over. Like, we were bullish right here. We ended up breaking this lower, breaking this higher. We could have got a buy inside of here. Then we broke lower right here. We could have got a sell inside of here to take us down further. And then we get a buy up. No buys come down. Then we get a sell. And they kind of bought the liquidity down here. And now we're kind of pushing back to the upside. So that is pretty much the rundown for what happened this morning and how I was able to make 609. Um, I basically, excuse me, I basically was in anticipation that we were not going to get the beautiful pullback that I wanted to see, which would have been, that internal price action structure. But we ended up just getting a V-shaped recovery and a strong push to the upside. So based off experience, I just kind of knew that I should go ahead and get in this position. Now, there was another trade I could have took, which you can see right here. We get this 5-minute break of structure to the upside. And this would have gave me the confidence to then take another buy from the asset, but I ended up just locking all my accounts. I didn't want to deal with it or deal with too many more losses. I ended up taking a small loss at the end, which was cool. So I was up like another 100, but no. Yeah, I was up like another 100, but then I lost 100. So it is what it is. But you can see we're making higher highs, higher lows at this point. Just basing this off structure. So this is most likely gonna go up now and make a higher high. But we also have imbalance in here, so we could see a reaction, a push down again, and then a push back to the upside. So that's kind of what I'm waiting on. And for this setup, I would have went, let's see, I think the 15-minute time frame was the same. Yeah. So 15-minute break of structure. You always want to use the higher up time frame. I think, actually, no, that wasn't the 15-minute though. But anyway, let me use this imbalance. That would have been my entry criteria. Then you want to go down to the 1-minute scale and then trade that. So right here, you get a 1-minute change, then a 1-minute change, 1-minute change, 1-minute change. So I probably would have looked for this maybe on even the 30-second to see if that could give me a better entry. And it looks like it does down here on the second 15-minute break of structure. Or 5 minutes, sorry. So we get this break right here. Then we get this beautiful imbalance. Beautiful imbalance. Oops. Yeah, 30-second break of structure. This would have been the most optimal position you could have got into. Stop loss maybe under this low, or even this low. And then just target some opposing liquidity on the opposite side of the market, or imbalance on the other side of the market. And so maybe that would have been a trade right in here or in the middle for 2.5. And you can see we went well above that, but it's all good. I hope you guys enjoyed this video. Don't forget to like, comment, subscribe. I have a Discord channel where I do all my teaching and my one-on-ones, as well as my daily recaps that you guys can check out. Love you guys, and I'll catch you guys next time.